The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting for Tom O'Brien, the Money Masters show this morning. My pleasure to be here. Tom's on his way to, is it Las Vegas? Yep, I think Las Vegas, right. And so I'm sitting in, and let's just run the numbers. We've got the Dow up 13 at 17,094. The S&P is up 3.5 at 2007. Comp index is up 12 at 4809. The VIX is actually down 22 cents at 1745. You've got the E-minis up 5. I'm showing the chart right here of the E-mini. This is the daily on the left, weekly on the right, 120 minutes in the middle is the weekly, and on the right is the 120. We have that pattern that I call the Chapman wave stalk leg formation. Makes a long move to the upside, we call the leg. Then there's the body, the oval pattern. A breakout is the neck, and then you form the head, and you create the beak, which comes down. After the beak is formed, which usually comes back and retests the high of the oval, which was 1991.25. This morning's low was 1989.25. There's usually a pretty good bounce, and then that particular pattern has done its job. You have to find other forms of technical analysis to be able to decipher what's going on. My impression is that the Dow is holding extremely well and that there should be limited downside with a little more upside to come. And we'll talk about that in a moment. Let's just run the numbers. The numbers are such that if you continue, you're looking at the, let me just do this right here. So Tom always likes to look at the comp index. That's the very broad composite NASDAQ. Let me move the 120 minutes away now. And what we're looking here is that the comp index is up 9 at 4805, made a leg B, but it's underneath that peak C. Well, if you're not used to my terminology, I'll explain it in a moment. But it just suffice to say that we're in a fairly narrow trading band with a 200-period exponential moving average of 48.47 as both resistance and a magnet is bringing the price towards it. That's on the upside. The downside, the 9-period moving average at 4785. Let me double check because that's being covered right now. 4701 is the 9-period move. 47, no, that can't be right. 4783. 4783, just 20 points or so below where we are. That should be the 9-period moving average, should be good support. This is going to be very interesting. When we are looking at the different indices, there's been a little bit of a change in trend as the dollar, which was acting extremely well and then went into a very wide, narrow if you're looking at the monthly chart, but a very wide if it's a daily, a trading band between the 46s and the 96s and the 93s, is trading now underneath, very important, the 200-period moving average is at 94.31 on the index, down 45, holding what was, in fact, this tremendous support line. It was a resistance line, then it became a support line. Now it's again a support line, and a close under 94 will suggest that the dollar is taking a deeper time out in this H, lowercase h. Look, let me just draw it for you. That didn't look too good. So this is the one side. And here's the other side right there. And we're talking about right there. And we've got the back. So this is what we're looking at. An H, a lowercase h, then becomes a lowercase m. And in this case, the m just snuck above the previous high, but it couldn't close above it. And that says, be careful, because if you take out the middle support line of 94.06, then all of a sudden you're into this empty zone without any support going to the 92.62 area. My thinking here is that there's a good chance that the dollar will find some support in the 93.70s, somewhere around there, and then have another bounce. And at that particular point, it would be the gold, the continuous contract of gold, which is this still leg C? 1168.60, 1168.60. Yeah, this is still leg C. And it's right at the 200 period simple moving average, which most fund managers, nationally, internationally, that's really what they look at. Very few actually look at the exponential moving average. So we're right up against resistance. I think that gold could have a little bit of a dip and then one more pop to the upside. And then we'll see whether or not it's going to go back into the consolidation mode or whether it makes a high-level consolidation that doesn't take out the 1154 9-period moving average and, in fact, starts to move even higher. This is a very critical moment. If you're looking at the weekly chart, I drew this in. Oh, it's not yet. It's in the GLD. The arch that goes to an M pattern in the weekly chart as well. We've had the 1-to-1 Chapman wave parallel extension. They're going to the 1080 low. This is going to be very important because if you're looking at commodities, and if I go to the dollar TRCCI, that is, in fact, is the commodity index. It is the Reuters Equal Weight Commodity Index, which is in A, B, C, D. It's in leg D in the daily. Had a very good move in the weekly because it's made a nice move to the upside. Doesn't have the arch formation. In fact, it has a cup formation. And if you're looking at the monthly chart, it's really important that this support in the channel line that's going down, even though it's under the 200-period moving average, even though this time it's under the 9-period moving average in the monthly chart, you've got a positive divergence in the stochastic going from the 382 August low down to the most recent low of, what was that? That must have been, no, that wasn't August. That was the March of 2015 low down to the August low of 382. You've seen the rising stochastic and a flattening of the MACD, which says that the histogram is improving. This is the first time that the commodities have a chance to actually have a more sustained rally. So, got that out the way. Now let's look at the nitty-gritties of some of the other indices. You've got the S&P. At this point, SPX.X. Look, the S&P couldn't get to, it did get to leg D, but it couldn't get to the 200-period moving average of 2029.90. And at this point, 1992 is tremendous support. I'm looking at the stochastic and suggesting that there's far more strength than weakness right at this moment, and that the daily charts, as I've said before, have me sanguine. I'm more positive than negative on the daily charts of some of these indices. The weekly charts are going to be the ones that really tell us a lot. And then, of course, the monthly charts at the 9-period moving average in the S&P right here, that's going to be very important because the technicals are very weak. And that would suggest that there'll be more downside to come. But at the same time, this strength has to be, how can I put it? You got to see the rotation in enough stocks and indices to move higher, while the weaker indices and sector stocks start to move lower. If they, in fact, find some support here, then you've got a chance that the S&P can actually break into the 2030s within another 5 days. But that really is dependent on not closing underneath 1992. Let's call it 1992 to 1987. That'll be the key support in the shorter term. Weekly charts, well, we've got to wait until Friday before we can really tell. So I'm missing a couple of things here. USD, JPY, that's the dollar Japanese yen currency pair, looking like that H pattern starting to test the thin wick of the 2nd of October at 119.38. Down 0.33, I think it's going to be testing that level there. It was going with the dollar before, but it's now divergent. There's a divergence between the two. And the EUR USD, this is very important because you've got mirror images to a certain extent. Look, here's the soft W pattern, two U formations, cup formations, trying to test the high of 1.1459 of the 18th of September. Is trading at 1.142 right now, up a tad. And what's important about this is that the weekly still looks like it wants to make a leg D above 1.171. And if it does that, that's going to turn the monthly into a leg C, and quite positive, saying there could be a little further to go in the rally. So this is a very important moment. Now, a couple of things I want to look at here. If you look at the IYT, which led the market down, it is holding, but it's not great, but it's way off the lows of 182.26 if you look at the IYT, the iShares of the Dow Jones Transportation Average Index. And it says to me that we're still in the larger context of the weekly and the monthly is still saying negative action until the IYT, trading 146.01, up 71 cents, can break and then close in the, I would even 153, I would like it above. To have some confidence, it should go above 153.03, the high of the week of the 7th of August. It needs to close above that. And then you've got yourself a very nice V-shaped formation that suggests that it could even go to the high of well, let's do one thing at a time. 153, it's only down at 145. I mean, that's 8 points. That is huge. I'm not sure if it's going to do that. I'll tell you on the downside, I think it's just in a trading range right now. But at any point in the next 3 weeks, if the IYT closes below the week of the 2nd of October, that low 137.24, that's a problem, and that's going to probably lead the market lower again. So let me just quickly do a summation of what I'm looking at for my subscribers to my opening call. We're looking at the market as if the Dow low of 15,370 was a key internal low. There should be a residual low within 6 to 8 weeks, and that low it might touch that level, but probably the 15,700s to 16,000 is going to be absolutely key support that needs to hold, and that's going to be the test. And as the market is pulling back, you will see the S&P, the QQQ right now, trading at, I had a question I'll get to in a moment, trading at 105.94, down 16 cents, really holding quite well with the stochastic at 93%. The MACD is good. The weekly chart, it's just going sideways, and that's important. But at this particular stage, I would suggest that the 105.20 to 104.75 level should contain any price weakness, and that if there is at any point in the next 2 days a break above 107.26, then you will probably get a leg D above 108.73 in the next week and a half. That's the way I'm looking at the market right now. That's the QQQ series. IWM at this particular point is down just 2 cents at 113.97, 113.94. Made a peak B, and then it pulled back. This is the second peak B, but from a lower level. And this peak B is saying in the 120-minute chart, where did my 120-minute chart go? Move this away for a second. There it is. Just bring it down. Okay, let me show you something here. This is going to be very important, because the IWM, the Russell 2000 iShares, went to a peak G right there. Actually, A, B, C. Actually, that's a D. Let me just redo this. I did this real quickly. Yesterday, I wasn't. That's right. This, in fact, is an A. In an instant restart, this is a B, this is a C, and this is a D, and you're getting your pullback in the IYM trading down 9 cents. Now, it's really important. I have to put down a down arrow here because the MACD and stochastic have turned down sharply at a D, and it's under the 9-period moving average for 3 bars. This is the 120-minute chart. And what's really important about this particular thing is that it failed in the V-shaped pattern to get even to this high here of 117.30 that was made 11:30 on the 21st of September. Most importantly about this, it's got support at 113.25, the 200-period exponential moving average. So as we look at these different charts, what we're looking at is a digestive phase. And one of the reasons why I was expecting a digestive phase is that if you look at the Dow, let me go show, this is what I show my subscribers every day. If you look at the Dow, there were all these little dojis that were saying, hey, I'm struggling. And there's a fight between the arch formation and the cup formation. And my suspicion is that the Dow it's down 18 now at 1763. Could pull back a tad, but that green line, which is suggesting that there could be a little bit of a pullback, is trading at, there comes the break, trading at, I don't know if I can get it in time. Green line, 18. No, I can't do it in time. All right, I'll be back. Basil Chapman, Tiger Technicians. Oh, sorry, Tom O'Brien's show. It is the Money Masters. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So, Basil Chapman, and I'm sitting in for Tom O'Brien, and this is the Money Masters show. My show is usually 11 o'clock till noon, straight after this, and I'll be there for that as well. Now, a couple of things. I had a question about the S&P, about the notation in the Chapman wave. Maybe I'll get more into it in my show, since many people who are listening now don't really follow the Chapman, might not be following the Chapman wave. But basically, I feel comfortable saying that that was an A that failed, and it went A, B, C, pulls back, and that has to be D. That little candle right there on the October the 9th, I did not take out the C high, but the one yesterday did. And that gave you D. The character of this single move up here, even though it's two peaks, really is looking to me very much like a new leg A. It has that kind of character of the start of something. So I think that was the question. I hope I answered it correctly. I mean, I hope I answered the question rather than going off talking about something that wasn't being implied. Okay, now the next thing is what we're looking at here was a question from the Den about Exxon. And it's a great question. In fact, I get to ask this all the time. And the question is, can I buy CVX, that's Chevron, or ExxonMobil, XOM, and hold, collect a nice dividend and not lose on principal for at least a few weeks? Well, I don't know how you can time it to get the dividend, so that's your business. I don't know if maybe I'll have the next break, I'll have a chance to see when the dividend is being paid. But most importantly, let me show you something here. I gave this out as in one of my webinars on on where we are at this particular time. And this was back, I think the last one must have been in June and July. Yeah, I think in July. And what I'd said is that this is wave 5 down in Exxon in my interpretation of Elliott wave. But at the same time, I'm not expecting it to be 5 that says that's the low and that you're not going lower than that. It's a low, not the low. And as a result, it could have a really nice percentage rally. But I don't think that's the term that says you're not going to see this low again this year. I think you actually are going to test it, same as the Dow. That you will be testing the area, but you don't have to break it. In the other indices, probably you might have to break it if we do further testing. So this is what I'm looking at here. Exxon trading at 79.57 up 41. In the weekly chart says, I'm now way above the 9-period exponential moving average of 76.72, which should be good support. Stochastics acting very well. MACD's turned up. The histogram, this little vertical lines, is now positive. And if it was a little earlier, if it was in the 73s, I'd have absolutely no problem saying, you know what, if you're buying the 73s and you are prepared to have a 3.5 point stop, which would be a 5%, which kind of negates your dividend. But if that's what you would be doing, I would feel quite comfortable in saying, at least for the next few weeks, ExxonMobil could have high-level consolidations and go a little bit higher, but at least make the 77 to 76 area pretty good support. I'll be back and talk about this a little bit more. I think it's quite an important question. Dow's down 29, S&P's down 363.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So let me just quickly finish this. T, A, B, C, D. All right. So CVX is Chevron, and it's trading at 88.83, up 45 cents. And let me just Chevron Corporation. So the 120-minute chart has made a peak D, and it's in a consolidation phase. You know, I'm going to suggest peaky in the den because I know that you follow these and you're able to monitor them very closely. I think either one. I'm just going to do everyone. If you're looking at my charts, this is the daily chart of CVX with Chapman wave notation, peak C, and usually we want to see a peak D before we make decisions. And in this particular instance, the stochastics at 90%, turning down, but still at 90%, and the MACD is still very good. There is a positive move up in the technicals of the weekly chart, monthly chart. In both cases, really not very good. But it does say that the 93 level in the CVX is the 9-period moving average. That's 5 points from here. Now, keep looking at these charts. So I'm going to put this here. You've got the quadrant. You've got daily, middle is weekly, this is the monthly, and at the same time, I've added the 120-minute chart. I'm going to do it a little differently here. I'm going to see so that you can actually see it there. And I'm going to move it a little to the side because I want you to see the technicals on the right here. These technicals refer to the monthly. So here we go. Look at the charts. Here we go. Keep looking. And move your eyes from the left to the middle, to the right, to the bottom. And now we're going to do the same thing with Exxon. And you'll see that there's a little bit, excuse me, there's a little difference because Exxon retested the low of 67.03 from August of 2011, by going to 66.55, right on the 200 period moving average, and it's bounced nicely. I'm going to do this again. Keep looking. Now keep to the right. Keep your eye on the right. I like to do this because it's, you remember back in the old days when you had those wound up cartoons or pictures that were drawn, and then the second picture would be with the hand or the head moving just a little bit to the right, and the next one would have the head moving a little bit more. And as you wound it up, you got that movement, which is basically like how cartoons were drawn before digital. And now keep looking. So here we go. CVX, I'm not going to tell you which is which. I'm just going to switch 3 times. 1, keep looking at the right chart. Keep looking at the right chart. And one more time. Keep looking at the right chart. Can you see that this Chevron dipped lower? It's testing the low that was made back in July of 2010. ExxonMobil didn't get close to the low of July of 2010 at 55.94. It was 11 points higher. I'm suspicious of a chart that breaks key left side support, because it says that now becomes resistance on the upside, whereas the resistance on the upside here is at 81.62 in the monthly chart, and all the way to the trend line support of 84.79. So I'm going to say that Chevron, out of the two of them, is probably a little bit weaker. Exxon's a little bit stronger. You could actually get a little bit of both. I'm not, because it's already moved about 2 points, I'd even say 3 points higher than where it would have been a much better entry price. You now have to make your entry point a smaller position that you take. And it's holding well. And I think it's being treated right now as a dividend stock with a potential for capital appreciation. So I'm going to say yes. If you're talking a few weeks, I'm saying yes. Where would I get out? At 79.49, 77 to 76.5 is kind of important support. I wouldn't want it to break below that. And if you had to take a 3-point loss, its 3-point loss is about 4.5% maybe. So maybe that's the difference. So you do that homework. I'm just talking about what would be the stop loss in CVX. CVX, I would say CVX, the stop loss is at 864. I don't know if I want to go all the way to 85 because that's really the key support. I'd go to 86.30. If it starts to take out, close underneath 86.30, I'd say just be careful. All right? So, but Exxon's the one that I'm looking at. Then Exxon's the one that says, give it a 3-point stop right now, 76.50. And if it starts leg D at 80.18, then you have a choice. You can take half of it and raise the stop to the 3 points we just spoke about, and keep the other at the point that we were talking at 76.50, and that'll mean that one part of it is more vulnerable to being taken out, but at least it'll be taken out with a profit. If it goes above there, I would say that 1/2 of your position, whatever the position is, should not lose any money. The other half can take on the risk. All right, markets down 58 in the Dow, down 6.5 in the S&P. At peak D, now the big question is, I thought about this a lot. It wasn't even a peak D. It looked like today could get a peak D in the Dow. One of the reasons why we want to go long is because I'm looking at this as more of a sideways Dow consolidation, not the S&P, but the Dow, and that any reflexive action to the upside should start to see some of those Dow dividend stocks, exactly what we're talking about, start to move higher to give some kind of a movement to the upside, and we'll see what happens. So now let's do a couple of other things. I didn't look at gold at all. Gold is trading right now. Gold is up 10.40 in leg C. This is a very good move in gold. And what I'm looking at here is that there is that relationship of the dollar. Oh, I don't know if I can do it now. I can't do it quick enough. I've got a relationship showing the counterpoint move that often happens when the dollar slides and gold moves higher, or the dollar rallies, gold moves down. In this case, you've got a beautiful 2 cups, like a U formation with another U formation, and This is now, there was a trend line resistance. That's gone. I can take that now and I can say, okay, let's do this. Let's shorten that. Whoops. Let's shorten that. And let's go to this level right here. And now let's look at this. That is in fact the new trend line. It's a rising trend line. In fact, it's almost like, look, fascinating. I love being able to take trend lines, move them around, and see how they fit. Look how perfectly this fits. There's a channel now, and that channel is saying a break above this level would be very positive, and that level is at 1197. And this is the resistance point. New parallel, make it red because it's going to show the resistance, make it pink. Right there is your resistance, and it's saying that gold, if it makes a peak C by tomorrow, because it's now above the 200-period exponential moving average. That's the first time. Look how important these moving averages are. The price of gold took out, it was resistance, then it became support, and then whoosh, on the 6th of February of this year, it just went from 1271 whoosh down to 1230, and that was it. And then that was it right up until a test, 14th, 15th, 18th, and 19th of May, right on that coral color moving average, 200-period moving average. Look what happened. It got repelled. Another thing that happened is you took a time sequence and you've made it almost exact to that point. And now, as you're getting closer and closer to the 200-period moving average, boop, it goes right through. The stochastics at 92%, the MACD is good, and this is suggesting that gold is going to trade into this channel with a resistance line of 1188. We're at 1175 right now, and very strong resistance at 1196. Take that out, and that's a very big positive because it turns the 200-period moving average, which is now at, see if I can do this, 1170, into pretty good support. It was a magnet line, and now it's becoming a little bit of a propellant line, but in fact, it's still a magnet until there's a little time taken, and then whoosh, you move away from it, and then all of a sudden, you get a move that says that area that was resistance and a magnet is now a propellant, and that's going to be very important. All right, so let's go on. So gold acting very, very well right now. 120-minute chart did what? 120-minute chart in the leg D. So we went, and remember in the Chapman wave, what we look for is from the lowest, most identifiable low bar, in this case, that trough C. You merely want to count each successively higher peak until, and a peak is made by 1 penny, or if it's in the futures, by 10 cents or 25 cents, and the next tick, and that takes you to at least a D, and that's where you want to decipher and look at it and say, what's happening now? And I'm saying that if anything, we might get a peak C, but it's acting extremely well, way above the 1154 9-period exponential moving average support. So now let's do this. I want you to do the silver, SI, and silver has gone to a leg D already. So it's a little bit ahead in the Chapman wave, and it's at D, and it's just above the 200-period moving average. But look how it's struggling to hold it. That area that was, in fact, a sharp propellant to the downside, call it a repellent, pushed it all the way from the 1750 area down to the under 14, and now it's trading at 1610 in leg D, back at the 200-period moving average and the 200-period simple moving average. If you hear people talking about the 200 moving average, they really, most of the time, they're talking about the simple or moving average. So now, and we've gone A, B, C, D in the 120-minute chart. This is going to be very interesting. A couple of things I want to look at. My Dow quartet, GE, has made a peak E and is pulling back. Made a peak, well, it recycled. So it recycled in the 120-minute chart, pulling back, and this is going to be key support for GE, which has been acting beautifully. 27.43, so 27.65. So 27.43 to 26.89 is the area of support that I'm looking at in GE. Holding beautifully, stochastics at 93%, MACD is great. So far, nothing wrong with this chart. IBM, my Dow quartet consists of 4 stocks, has gone to, I think it made a lower low. So that 140.62, 140.56. So this is actually an A. That's a C minus. This is an A. But you remember the chart we were looking at yesterday? I showed the chart of the 120-minute E-minis. I showed this chart right here, how it had made an arch formation, that H, lowercase h, with a successful test, closed above the peak over there, that peak C, which said, now it can retest the left side peak of importance, and that's right there. And it went right through it, went to an E, and then plummeted down. And as we're looking at it now, it made the H. This time it went to a lower low, that one there, that was made, is that today? No, that was, I'll tell you when it was. That was 1820 on the 13th. That is yesterday. Okay, was it yesterday or sometime yesterday? Oh, yesterday, last evening. And then it goes sideways, 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 has an A, B, C, D, goes to an E, and then plop, it comes down and is retested and taken out. Key support. This is going to be a very important session certainly for me, in that we have got that peak D in the daily, and we're actually pulling back. We've got to be careful now to see where the support is. So that's IBM holding okay, nothing great. This is not a great chart at all, but it's the daily is quite good. But now we get to Triple M. And Triple M went to a peak D. It's pulling back just a tad down 29 cents. It's getting closer to the 200 period. I think it's going to try to test the 151 area. It's at 148.84 right now because that's the 200 period moving average, but it has got a peak D, but the stochastic is strong. MACD is good. And UTX, the final one, is holding beautifully. It's down 8 cents at 94.20. Very interesting session. We'll see how we close. Much needed with options expiration. The trends are being pushed one way or the other, a little bit more than normal. And so how, let me do this, the VIX index, I haven't done it all. The VIX index is always very important in my work. VIX index is up at 18.47. It is hitting the 9-period exponential moving average. Stochastic is turning around in the daily, but it's only at 7.32%, and the MACD is struggling to work its way higher. And the weekly chart is impressive because it's held the 200-period moving average, and it is trading above it, but below the 20.79 period moving average. And the weekly chart is still not good. And we've got the 120-minute chart and leg B to the upside with pretty good technicals. So as it stands right now, we're looking at certain conditions that are being met. And the VIX index, if this is a trough F start of a much bigger move, by the end of the day, and it could happen because the Dow is now down a little bit more, 5.54%, S&P is down 0.41. If it does happen, then by the end of the day, the Dow will be down about 120 points, maybe even a little more, but 120 points, and the S&P will have caught up and will be down about 12. As it stands right now, this is a really important moment in time and in price in the short term. This is the very near term. I'll be back and talk about that in a moment. Basil Chapman.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Folks, we're looking at Walmart down 5 at 61.30, and most importantly, it is breaking key support on the left. It made a peak G in the Chapman Wave back, and that was January, I think. Yeah, January it went to 90.97. Let me just type that in here. 90.97. 12015. Wow. That is a big drop. The monthly chart is looking just horrible. Now, this is one of the things that I've been worried about is the RTH, the REIT. No, sorry, not the REIT. The retail index. This is the ETF that really tracks. It's the market vectors. There we go. Market vectors. A retail ETF has Walmart as number one, Home Depot, Amazon, CVS, Lowe's, Costco. It just goes on, Target, TJX, etc. Now, what's really important about this is that it's held extremely well in a period that in many ways seems to be representing a slowdown, an economic slowdown in certain areas. Now, there's not an economic slowdown if you're listening to what's happening in the auto industry. So this is very important because it's really just a sideways trading band in the RTH, but it has made a peak F in the Chapman Wave at 79.50 with the next month 79.25 at Chapman Wave 2-bar reversal. I'm watching this real closely because the rotational aspect of this market since the summer of 2010 saw corrections on the upside that rotated from the best sectors to the slow sectors as the correction went on, and then right back to the best sectors, so that you've got something like the IBB or the RTH, the retail market vectors moving higher, the PPH, the pharmaceutical area, they just kept screaming to the upside. Now that's completely changed. And this is a very important moment because there is decisively the rectangle formation, let's call it more an oval formation that's formed in the weekly chart of the RTH. And the technicals are suggesting that if there is weakness from 74.56 down to $1.63, if at any point you start to see this ETF trade under 73.30 or 70, let's call it 73, a close on a weekly basis, it really suggests that the weekly chart, look at this, the weekly chart, that up channel, that Chapman wave inside track support area, that starts to become a target in an H formation. So that's very important, and certainly a break under the October low of 71.87 would just say, hey, this is serious. This could be talking recession. However, when I go to the Ford, look, Ford is acting look at that high level consolidation at 1490. Look at General Motors. General Motors holding at 3308. Actually, we are long General Motors, portion of General Motors. Look at the FCAU, which is Fiat Chrysler, holding beautifully. So this, and let's see if the foreign makers, Toyota Motors, Toyota Motors is not that great. It's making that H pattern. So the domestic, even though you've got the Italian company of Fiat that embraces the whole Chrysler divisions, is really interesting. I'm thinking of it as an American. I think this is Buy America. This is a period that's very interesting. Oh, I would maybe in my show in the next hour I'll talk a little bit more about the political scenario. This is not the politics; it's the politics of politics. But we'll leave that for now. I'll do it if I get a chance. I'll do it in the next hour. Most importantly, look at bonds. Bonds right now are up $1, almost $1.50. What's really important about bonds at this particular time, and I'll go through this a little bit more in my show, is that remember the EUR-USD, how the euro-dollar was acting pushing to the upside. So now we're going to be looking at this. I'll talk about it more when I do my show straight after this. Basil Chapman, been sitting in for Tom O'Brien. I'll be back for my own show, the Tiger Technicians Hour, straight after this break. Dow's down 82, S&P's down 7.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.